Hey, what's up, stock compounders? Today I want to talk about the difference between investing and speculation, or gambling, as you can call it. So I just want to read a few excerpts from an article from the CFA Institute that I found really interesting. So this is a blog post entitled, "What is the difference between investing and speculation?" The first thing I want to say here, so the oldest book ever written on the stock exchange business was by Joseph de la Vega. And he observed three classes of people, okay? The princes of business, called financial lords, were the wealthy investors. The merchants, the occasional speculators, were the second class. The last class was called the persistent speculators, or the gamblers, okay? That's the first point. Now, there was a pretty compelling definition actually put forth about what investing is. The definition of investing from Benjamin Graham, the father of value investing, in his book Security Analysis. I want to read that real quick. An investment operation is one which, upon thorough analysis, promises safety of principal and a satisfactory return. Operations not meeting these requirements are speculative. So, safety of principal really means you're not going to lose money. That's Warren Buffett's rule number one: don't lose money. And then a satisfactory return. And then the final point I want to share from this blog post, Graham wrote in The Intelligent Investor, "The distinction between investment and speculation in common stocks has always been a useful one, and its disappearance is a cause for concern. We have often said that Wall Street as an institution would be well advised to reinstate this distinction and to emphasize it in all its dealings with the public. Otherwise, the stock exchanges may someday be blamed for heavy speculative losses, which those who suffered them had not been properly warned against." Okay, so I want to give my take on investing versus speculation. So my sense of what investing is an activity where when you take the probability of gains and the probability of losses and you kind of combine those things, the odds are in your favor of making money. So there's an expectation that you're going to make money. You're going to get back more than you've laid out today. That's investing. Speculation means that if you take the odds of gaining money and the odds of losing money, and you kind of get the average of those, you have a probability of losing money. The odds are stacked against you. That's what speculation is. And a simple way to think about that is the way I look at it. With investing, you're focused on the downside. You become a student of why businesses decline, why businesses fail, okay? Because if you focus on the downside and you study all of the reasons that businesses lose money or go out of business, you can avoid putting your money into things that have those red flags, okay? If you avoid all of the ways that, throughout history, and there aren't that many ways, there aren't that many reasons that businesses lose money or go out of business. But if you really put your emphasis on that and study those things, that's what Charlie Munger does. That's a big part of Charlie Munger and Warren Buffett's success, is that they avoid doing stupid things. And in order to avoid doing stupid things, you have to understand what the stupid things are. And that's really being a student of why businesses fail, okay? Or why investments fail. Now, speculation. If you ever notice, you go into a casino, all the speculators or gamblers are focused on is the possibility of making money, okay? They don't care about the possibility of losing money, even though the possibility of losing money is greater than the possibility of making money. They are solely focused on that ad that shows the person with the $10,000 check who just won it at a slot machine at the casino. Okay? So that's an easy way to think about it. Investors are focused on minimizing the downside or not losing money. I mean, that's Buffett. That's Buffett in a nutshell. Don't lose money, and the rest will take care of itself. Gamblers or speculators are focused on, oh, look how much money I can make. And, I look at Robinhood investors and what they're buying in the last week, the last month, and it's so much focused on the stocks, the companies that have the story that's like, oh, maybe this company is going to be the next Tesla. Maybe it's going to be the next Amazon or Facebook or Apple, right? There's the whole inner dialogue is maybe, think of how high this thing could go. Whereas the investor, that's not part of the equation for the investor. It's, okay, what is the reality? What are the ways that this business could lose money? Will the earnings, can management grow earnings over time? Do they have a moat where, competitors can't just come in and steal market share from them easily? There's reasons that the business is protected from competition. That's a big one that Buffett talks about, the economic moat. Another one, is management competent to grow the business? Do they have a track record of, growing businesses in this specific industry? Are their skills aligned with what their skills need to be in order to grow this into a durable business that grows over time, that gains more and more market share? Is management incentivized to transfer value from the business to shareholders? Or, is management just getting an annual salary where, there's no alignment between management, what management earns, what they take home in terms of pay, versus, how shareholders benefit? One of the best things to look for there's a book, 100 Baggers. It's called 100 Baggers. It's a study of companies that have grown their stock 100x over, however long. I think it was like a 50-year period. There was something like 365 businesses that had managed to do a 100x in the stock. And one of the commonalities for these businesses is that there's owner-operators behind the wheel. Management, has a lot of equity ownership. So their interests are very aligned with shareholders. That's hugely important. And then, is the price right? Okay. There's no such thing as a great business that's a great investment at any price. As value investors, we want to be able to buy something for significantly less than what it's worth. And for great businesses, that's not the case most of the time. But, there's events that happen sporadically that create the conditions where a great business can be bought at a discount. And, investment is all about being prepared for that situation to really take advantage when that situation arises. So, that's mostly what I wanted to share, guys. Investing, the odds are in your favor to make money. And, that's easy to say, but obviously you've got to understand the business in order to assess whether or not that's the situation, that the odds are in your favor that you're going to make money. So you really have to be a student of business. You have to be a student of why businesses succeed, and I think even more importantly, why businesses fail. And then, of course, speculation or gambling. The more you do it, the more money you're going to lose. That's because the odds are against you that you're going to make money if you're speculating. And I think a big part of it is patience. the gambling that I see happening is people want to get rich quick. They don't want to do it the investing route because, you know, investing is not it's usually not a get rich quick thing. But if you're able to tap into the power of compounding, it is kind of a get rich for sure thing, but it's not a get rich quick thing. And a lot of people, you know, there's a lot of people who have their kind of value, their sense of value, this intrinsic worth tied to, you know, what their bank account is. And that can lead to a lot of kind of, you know, activity where there's impatience. You know, I need this. I need to get rich fast in order to have validation, in order to feel like I've made it, in order to feel like I'm important. And that's a dangerous game. Anyway, guys, I just wanted to share kind of my thoughts on investing versus speculation. Let me know in the comments, you know, how you differentiate between these two things, and you know how you kind of catch yourself if you're slipping into the gambling speculation space, and how you're able to nudge yourself back over into the investing side. Very curious to hear from you about that. Anyway, that's all I got, guys. I will see you in the next video. Take care.